Hello friends, welcome to our today's class. This class would be dedicated towards the transactions which are special in nature. Special in the sense that till now what we have covered is we have covered the transactions which were of general nature. So we'll see some special transactions today, and we'll also see how to pass the journal entries related to these transactions. So today's class would be covering basically three topics. One topic would be the purchase of an asset, which is not a good. We'll see what is the difference between an asset and a good. Then we'll be talking about the transactions, journal entries related to the transactions wherein the money has been withdrawn or the goods have been taken out of the business by the owner himself, not some other person. What would be the entries in case of these transactions? In today's class, we'll also be discussing as to what are the various types of discounts which are allowed or which are received in the process of a business transaction. We'll see how to pass the journal entries related to the discounts which have been received or discounts which have been given in a business. Clear? So let's start our class. So when we talk about the journal entries related to the purchase of assets which are not the goods, we need to understand the difference between these two. Goods means those items which have been purchased for the purpose of reselling, whereas assets are things which are not meant for the purpose of resale. Say for example, a stationery shop owner, he buying a fan is not a good for him, it is an asset for him. Similarly, he buying a car to be used for the business, again this is an asset, not a good. But on the other hand, if we talk about an electrical appliances vendor or a businessman who is involved in the buying and selling of electrical appliances, for him, if he is buying a fan, this would be considered as a good for him because he is buying that fan for the purpose of reselling. Similarly, a dealer of car, whenever he buys a car, the objective of buying that would be to resell it. So for him, the car would be goods. But for any other person other than a car dealer or a car manufacturer, buying a car would be an asset. So we need to understand the basic difference between the asset and a good. Goods are those things which are meant for the purpose of reselling, and assets are those which are used in the business and not purchased for the purpose of resale. Clear? So the first thing that we need to understand is whenever we buy an asset, what we need to do is we do not use the term purchases account. What we do is we use the related asset account. Say for example, buying a car by a person not dealing into cars, for him it would be car account, not purchases account. Right? Say for example, if Mohan has purchased an air conditioner for his showroom for rupees 20,000. Assuming that Mohan is not a dealer in air conditions. So for him, this would not be a regular purchase. This is not a regular purchase for him. This is purchase of an asset. So if this thing is clear, then we need to understand that what should be the name of the account, because we know that whenever we pass any journal entry, we need to know the name of the accounts. So the two accounts which would be involved here would be an air conditioner account. The other one would be the cash account or the bank account. And we have known, we've understood that if nothing is mentioned, we assume that transaction to be a cash transaction. So the two accounts which would be involved in the above transaction would be the AC account, not the purchases account, not the purchases account. Why? Because the AC is not meant for reselling. Had it been a case that Mohan is a dealer of air conditioner or electrical appliances, for him it would be a purchase account. But here, since he is not, it is not mentioned in the question, that he is a dealer in the electrical appliances, which means we need to assume that he is a businessman of something other than these air conditioners. And this air conditioner is being purchased for his to be used in his showroom, which means this is an asset for him. So what we need to do is the journal entry passed would be air conditioner account debit to cash account. 20,000 debited and cash account treated with 20,000. The narration would be being air conditioned purchased to be used in his showroom. This would be the narration. This would complete the entry related to the purchase of an asset. Similarly, if you buy a car and you are not a car dealer, the account would be car account debit. If you have purchased a refrigerator, it would be refrigerator account debit. If you purchased a motorcycle, it would be a motorcycle account debit. If you purchase a computer, it would be computer account debit, not the purchase account debit. Land, building, plant, machinery, all these are the assets which are purchased by a businessman to be used in his business. For all these accounts, you would not mention the name purchase account, but it would be the related asset account. Hope this is clear. The next one. Entries related to the withdrawal of cash for personal use or goods for personal use. See what happens when a person invests money in the capital as a capital in his business. What we say? We say capital has been infused. So what happens if he takes out cash from that? We do not use the term cash here, capital account here. What we do? We use the term drawings here. And the net result of this would be the same because drawing is adjusted with the capital balance at the end of the year. The net result would be the same. But in place of saying capital account, what we do is we use the term drawings account. Say for example, when someone Mr. A, say for example Mr. A started a business for cash 10,000. The entry that we pass is we say cash account debit to capital. But when Mr. A withdraws cash of 10,000, we do not say capital account debit to cash. What we say is we use the term drawings. We would say drawings account debit to cash. Right? So in the example wherein Rohit withdrew 20,000 from the business for his personal use. It is not for the business use. It is for personal use. Which means he has withdrawn some money, which is called as drawings in the accounting language. So the entry in this case would be drawings account debit to cash 20,000, and the narration to this entry would be being cash withdrawn by Rohit or the owner for his personal use. This is not for the business use. If this is for a personal use, the account to be debited would be the drawings account, not the capital account. And I repeat, the net effect of this would be the same because at the end of the year, this drawings would be adjusted with his capital balance at the end of the year. Net result would be the same. But while passing the journal entry, you need to understand that drawings account is to be debited, not the capital account. Clear? Then let us see the entries related to discount. Now before understanding that, we need to understand what a discount is, what are the various types of discounts, which discount account is to be recorded, which discount account is not recorded in the books of accounts. So discount is nothing but the reduction in the list price of any good or service, first thing. This can be in form of rupee discount or the percentage discount. Say for example, goods worth 10,000 purchased for 9,500. This is an example wherein the discount is given to you in rupee terms. Similarly, goods of list price 10,000 purchased at 10% discount. This is an example of the percentage type of discount. So what we do in this case, 500 is the discount And in this case 1000, which is 10% of 10,000, is the discount amount. So the questions related to discount can be given either in terms of rupees or in terms of percentage. Clear? Then the journal entries, when we talk about journal entries of discount, discount can be received or allowed. Received, when do you receive the discount? Whenever you buy anything. You bought a car, received a discount of 50,000. So this is the discount that you have received. Whenever you buy anything, what you do is you receive the discount. And when you receive the discount, it is a benefit for you. And when anything is of any benefit to you, the account is to be credited. These are the rules of the nominal account, if you remember. And if you do not go to the video lecture related to the rules of debit and credit, you will find as to which account is to be debited, which account is to be credited when it comes to discount. Similarly, when we sell something, whenever we are selling something, what we do is we give a discount. Whenever we give a discount, we receive less than the list price, which is a loss to us. And you know that all the expenses and losses are debited. So this type of discount that we give whenever we are selling, this account is to be debited. So if anyone asks you, tell me whether the discount account would be debited or credited, then you need to ask him that whether you have allowed the discount or whether you have received the discount. If you have received any discount, it's a gain for you. If it is a gain, it has to be credited. Whereas if you are allowing any discount whenever you are selling something, you allow discount. Whenever you are allowing discount, you are receiving less money. So that would be a loss for you. And this, in that case, the discount account is to be debited. Clear? Discount can be of two types. One would be a trade discount and the other one would be a cash discount. Trade discount is a discount which is given to everyone, and this is given to boost up or increase the sales volume. Since this is given to everyone in order to boost the sales volume on the list price. Say for example, whenever you go to buy any, say for example, dress for yourself, you go to a mall, you find a tag called flat 50% off. What is this? This is a discount which is given to everyone who purchases that in order to boost the sales volume of that product. So that type of discount is called as a trade discount. And you need to remember one thing, that trade discount is never recorded in your books of accounts. So no journal entry is required to be passed. Remember, trade discount is not recorded in the books of accounts. So you need not worry about the journal entry. All you need to do is you need to pass a journal entry with the net amount. Say for example, if it is given to you that the goods worth 10,000 has been purchased at a trade discount of 10%, which means you need to pass a entry for 9,000 rupees only. You will not mention the discount account anywhere in your journal entry. Why? Because trade discounts are not recorded in the books of account. First thing. Second thing, the cash discount. Cash discount is given to those clients who would be paying you earlier than the normal duration or as compared to the other buyers. So this discount is given to those who pay up early in order to speed up the cash collection. Here it was to increase the sales volume. Here it is to speed up the cash collection. This type of discount or cash discount is recorded in the books of accounts. And again the rule would be, if you have allowed that discount, it is debited. If you have received that discount, it would be credited. Now the question comes, what happens if in the question given to you, you find both the trade discount and cash discount? The answer to that would be, first we need to calculate the trade discount and then we would be calculating the cash discount. We'll understand this by way of an example. So the first example is Ravi sold goods worth 50,000 at 10% trade discount. And we have seen that when it comes to trade discount, we would not be recording that. All we need to do is find out the net amount. So 10% of 50,000 comes to rupees 5,000. We'll simply say sold goods for 45,000. Simple. So in the journal entries of books of Mr. Ravi, what we do is in the first entry, since we do not have the date, we'll mention A here. We'll say goods sold worth 50,000 at trade discount 10%. We'll say cash account debit or bank account debit or the name of the client if it is given to you to sales. 45,000 on the debit side, 45,000 on the credit side. The narration to this would be goods sold worth 50,000 at 10% trade discount, TD, trade discount. And since it's a trade discount, we do not have a discount account here. Clear? The next entry, it says Ravi sold goods worth 50,000 at 10% cash discount. When you have the term cash discount, which means discount account is to be mentioned. You sold goods, allowed discount, discount allowed. This is a loss for you. You would debit this account. So how would this entry would be? It would be cash account debit. How much cash has been received? 45,000. Cash discount account debit or discount allowed account debit 5,000 to sales 50,000. Being goods worth 50,000 sold at a cash discount of 10% would be the narration here. You need to understand the difference between these two. Here the cash discount account has been mentioned, whereas in this case there is no mention about the discount account because this was trade discount. So trade discount account is not recorded. Cash discount account is recorded. Then case C. Ravi sold goods worth 50,000 at 10% trade discount and 10% cash discount. We have just seen that when both the discounts are given to us, what we need to do is first we calculate the trade discount. 10% of 50,000 is 5,000. So the value of that product for me would be 45,000. Of this I have given 10% cash discount again. So 4,500. What is the amount received by me? It is 40,500. Clear? So the entry for this would be KC, cash account debit, discount allowed account debit to sales. How much is the cash received? 40,500. What is the cash discount? 4,500. What is the amount of sale? 45,000. Is this clear? So the crux of this would be when trade discount is given to you, you will not mention the discount account there. This is the example which is mentioned here in transaction number A. Then when the cash discount is given to us, we would be debiting or crediting the cash discount or discount account, which is the example given in the case B, sorry. And if both the types of discounts are given to you, both trade discount and cash discount, what we do is first we make the adjustment for the trade discount. Value of 50,000. First it has to be adjusted with 5,000, which is trade discount. The value comes to 45,000. Of this, I would be adjusting the cash discount, which is 10% of this 45,000, 4,500, which means 40,500 is the amount received. This would be the entry. The cash discount would be to the tune of 4,500. This is the entry for that. Since it is a cash discount, we would record it. And the amount of sale would be 45,000. So this is how we need to pass the entries when you have cash discount, when you have trade discount, when you have both the types of discounts. Hope this is clear. Goods worth 50,000 at 10% discount. Purchase goods for 50,000 at 10% cash discount. Purchase goods for 50,000, 10% trade discount and 10% cash discount. Same type of example that we have seen in the last case. Purchase goods for 50,000, it would be purchases account debit to cash. Since it is a trade discount, there won't be any discount account, 45,000. Narration would be being goods purchased for 50,000 at 10% discount. Second entry. Purchase goods for 50,000 at cash discount. Since it is a cash discount, discount account would be there. The entry for this would be purchase account debit. Discount account debit. Sorry, discount this, since it is a purchase, discount account would be credited since I have gained to cash, to discount received. How much is the discount received? 5,000. How much is the cash paid? 45,000. What is the purchase value? 50,000. Understand the difference between these two. That is because of the cash discount in this case and trade discount in this case. Clear? Then in case C, it says purchase goods worth 50,000 at 10% trade discount and 10% cash discount. What to do? First adjust the trade discount, 50,000 minus 10,000, sorry 10%, which is 5,000, 45,000. 10% cash discount, 4,500. Amount paid is 40,500. What would be the entry for this? Purchase account debit to cash, to discount received or cash discount. How much is the amount for cash discount? 4,500. How much is the purchase value? It would be 45,000. How much is the amount paid? 40,500. 40,500. This would be the entry when you buy goods involving both the trade discount and the cash discount. Clear? So this is all about the transactions of special nature, wherein first we talked about the purchase of assets purchased. Then we talked about the cash or goods withdrawn by the owner for his personal use. Then we talked about the concept of discount, which is trade discount and cash discount, wherein we have seen if it's a trade discount, you do not pass any entry. If it's a cash discount, discount account is involved. Whether to debit that account or credit that account depends on the nature of the transaction. Hope this is clear, right? Thank you so much and bye.